Welcome back, Fire Community. This is your mod, Snaky Sar, and today I would like to present to you the basics before fire. Of course, before we get into the presentation, the standard disclaimer remains that the presentation is only for educational purposes. Please do your own research and consult a SEBI registered financial advisor before making any investment. So let's begin. Now, before you dream about fire, before you think about quitting your job, sipping a coconut water in Goa, or retiring at 40, there are a few things that every Indian needs first. To even start the fire journey, you need to have your basics sorted. You miss this step and your fire journey collapses. Master it, and financial freedom comes much faster than you think. Welcome to Basics Before Fire. I am Snaky Sa, and today I am giving you the roadmap I wish someone gave me decades ago. Let's be honest, Indian personal finance can be quite messy. Everyone has an opinion, everyone is an expert. One guy swears by mutual funds, another one pushes crypto, your uncle recommends LIC, and your friend says, Bro, Nifty is all you need. Confusing, right? And with every wrong turn, you pay the price with your time and your hard earned money. Basics cut through this noise. It's not theory, it's not hype. It's a proven Indian pathway that helps you avoid money traps and grow faster towards fire. It's a structured approach. It fast tracks you by accelerating your fire movement by boosting unhindered investment growth. And it also is for everyone, whether you're a beginner or an experienced investor alike. You can think of basics as your financial GPS. 6 pillars, 6 habits, or 6 decisions that quietly determine whether you struggle for 40 years or hit that financial independence number decades earlier. Let's break them down. And trust me, number 6 is a total game changer, especially in India. So the acronym BASICS that I have designed stands for B is in for building your emergency fund. A stands for assuring yourself with insurance. S for simplifying your debt strategy. I for investing early and consistently. C for control expenses mindfully. And S stands for skilling up. We'll go through each and every one of these steps in detail one by one in the coming slides. B as in building your emergency fund. Let's start with the least sexy but most powerful pillar, the emergency fund. Look, life throws surprises, job loss, illnesses, family emergencies, or anything of that sort. If you don't have a cushion, markets don't really matter, SIPs don't matter, fire becomes impossible. So, it's necessary that you build an emergency fund which at least covers your 6 to 12 months of essential expenses. You would usually want to park this money, which is very liquid and is devoid of any market risks. Accordingly, liquid mutual funds, high interest savings or FDs, post office schemes, etc. are some options where you have easy access and low risk to keep such capital. It always helps you shielding against any sort of an emergency like a job loss, medical emergency, or any such major expenses. Established before riskier investments like equities, crypto, low rated bonds, P2P, etc., as this becomes your first line of defense. So, for example, if you have 50,000 per month expenses, then a corpus of 3 lakhs to 6 lakhs would be ideal if you keep the same in such high return savings investments which are devoid of market risks. Next is A as in assurance via insurances. Now, if emergency fund is your airbag in your vehicle, then insurance is your seatbelt. There are two must-have insurances for you. Term insurance. This is especially crucial if there is somebody who is depending on you financially. You should cover at least 10 to 15 times of your annual income via this insurance so that in the unlikely case of you passing away, your family is having adequate support for themselves. Second, we come to health insurance. At least 5 to 10 lakhs per person is a bare minimum in today's Indian costs of healthcare because one hospital bill shouldn't wipe out your 10 years of savings. Further, you can also explore additional covers for additional peace of mind like personal accident insurance, super top ups or top ups, and critical illness riders. This is just another way of foolproofing your strategy towards your health and your life as against making your corpus do the heavy lifting for you in such instances. Do remember, never mix insurance with investment, and please avoid ULIPs and endowment plans. Insurance is not an investment, it's protection. That's it. Next, we have S as in simplifying your debt strategy. Debt is like quicksand. The more you struggle, the deeper you sink. Start by killing high interest loans first, especially the ones with credit cards, personal loans, P2P loans, etc., which are nothing but financial jails. For home loans, you can always play it smart. You can use tax benefit and prepay only when it makes sense. This is because in India, home loans and education loans are usually at a lower interest rates as compared to all the other loans which we just discussed. Also, please beware of lifestyle EMIs. If you can't buy a thing twice with your cash, you can't afford it. And especially this becomes more important for people who are pursuing financial independence. Debt freedom ensures that you are all set for your cash flow freedom. It becomes a crucial step towards peace of mind and an accelerator for FIRE journey in India. Now let's talk about the fun part. I, as in investing early and consistently. Start with something basic like index fund. It could be Nifty, Sensex, or whichever index you prefer. They're relatively low cost, diversified, and are tied directly to India's growth story. Add to this ETFs for diversification, whether it is in the form of gold ETFs or silver ETFs. And in case you're looking for international diversification from a geographical perspective and also as a currency hedge, then you can also look at international ETFs. Ensure that you automate your SIPs so that your discipline becomes effortless. You focus on asset allocation so that you can balance your equity, debt, gold, and all other asset classes based on your goals and your age. And always think long term because compounding doesn't reward geniuses, it rewards patience. Moving on, now let's try and understand a factor which we can directly control from day one. Everyone talks about earning more and few talk about spending wisely. But here's a secret. Controlling expenses is often faster than increasing income, and this is where the acronym C stands for. Controlling your expenses mindfully. Track every rupee. You will be shocked where money disappears. While usually people suggest that you follow a 50-30-20 rule, wherein 50% are for your needs, 30% for your wants, and 20% for investments from your entire income, but people who are pursuing FIRE would rather want to focus on limiting their needs and wants to a lower level and maybe increase their investments to 40 to 50%. Of course, this also means that you don't fall for lifestyle inflation. A promotion is not a permission to upgrade everything. Remember, your entire goal is to free time for yourself. You want to become time rich, that's why you're going for financial independence. You don't want to spend on materialistic pleasures. So spend on what you value and not on what impresses others. Every rupee saved today is definitely a fuel for future freedom. And finally, we have the pillar that can turbocharge FIRE in India: skills. Your income is the most underrated wealth engine. A single certification, a strategic job switch, or one high value skill can double your salary in less than 3 to 5 years. That is where the acronym S, as in skilling up, stands for. Imagine doubling your income while your expenses stay stable. You don't just accelerate FIRE, you teleport towards it. And when you add side hustles like freelancing, consulting, online work, dividends, rentals, you create income streams that keep growing even when you're asleep. So now let's try and summarize the entire basics checklist. B as in building an emergency fund, A as in getting assured with insurance coverage, S standing for simplifying and eliminating debt, I for investing early and consistently, C for controlling expenses, and S for skilling up. FIRE in India, your path actually starts once you're done with the above checklist. And here's the truth. You don't need to be rich to start. You just need to start right now. Your future self will look back at today and say, I'm glad I began. If this helped you, please hit like, share, and subscribe. It motivates me to create more deep value content for you. Once again, this is Snakey Sar, your mod, signing off.